Hey guys, this is TD Ameritrade Thinkorswim platform, and I want to show you what I did for when SPY was trading in a low implied volatility. So I earlier showed you my trade over here, which was a sell-off trade. I sold a put here, but it was a combination, and time was in my favor in that trade as well. But even when the volatility was really low here, I made a trade that implied volatility uh, is low, but still I was able to profit from time decay. And since we know that time decay is exponential, my trade right now looks a little bit like this. So as time will pass on, your profits will lock in much quicker near the end of the date. And my expiration date is the 11th of November. But currently I'm trading at no loss, no profit because it has gone directional. Like I bought it at 299 and it has had an upwards movement, but it has to just basically stay under 307. And we can also see the probability analysis of this happening in the probability analysis tab. And well, what you have to do is you have to go to 11th of November. Yes. And it's over here. And then you can go up and see how much the probability is. So for it to go above 307 is a 30% probability basically. So 70% chances with me, and as time passes on, I'll start to log in my profit. Because actually a few days ago, I was even making 4,000 profit. It's just this $1.82 move. But please guys, when you're dealing with these types of trades, you want to hold up till the end and let the probability work itself out. You don't, unless you're 100% certain, you don't want to close these trades off earlier, because anything can happen. Today it's up, but it can also go down the other day. And so why did I do this trade? So I think I traded it around here. I used my Fibonacci extension, and that tells me it makes levels for me. I'll make another video for this. But basically, I saw that the implied volatility was really low over here, and the RSI was kind of neutral, I feel. So it would be a good chance to make like a range for the stock, the ETF to stay between. And that's really about it, guys. So that was my trade on SPY. So that's what I would advise you to do when there's low implied volatility, because or medium implied volatility. If there's really super low, like let's say over here, we had a point where there's super low implied volatility, then you maybe want to do a debit trade, and you want to buy a call or put one side basically. But the good thing about this trade is you're predicting on its volatility more than the direction, and that's what's great. But the problem with this trade can no, that's about it, guys. So I hope you guys enjoyed this really mini short video. I think I might have given you guys an idea about what you would do in a low implied volatility situation. If you have any other questions, please let me know down in the comment section below, and make sure to subscribe to the channel and give me some likes. Thank you guys. Bye.